Good morning, guys. It's Wednesday, April 2nd, 5:25 a.m. Central Time. Grain markets are lower this morning. I believe we've got some Liberation Day jitters. May corn futures down 7 at 454 and 3/4. May soybeans down 6 and a quarter at 1028. May Chicago wheat down 4 and 3/4 at 536 last trade. May Kansas City wheat down 3 at 562 and a quarter. May spring wheat down 5 cents at 589. We've got some biofuel news that is potentially friendly. Let's start there.
US oil and biofuel groups are pushing for higher biomass diesel mandates. The coalition, which includes the American Petroleum Institute, met with the EPA on Tuesday to propose raising the federal biomass diesel blending mandates to a range of 5.5 to 5.75 billion gallons, much higher than the current mandate of 3.35 billion. The groups have agreed to keep the ethanol blending requirement at 15 billion gallons. Smaller refiners and fuel retailers oppose the increase, citing concerns over higher fuel costs and potential job losses. Meanwhile, another group boycotted the meeting, claiming that the blenders' tax credit, which expired back in December, must be reinstated. They argue that the tax credit kept fuel prices low for consumers, while its replacement, the 45Z tax credit, is incomplete and ineffective.
We've been told for years now, Mackenzie, that biofuel would save the soybean market and
Right.
save soybean farmers in the United States. We need to be saved because Brazil is producing drastically more soybeans. The growth in Chinese imports is not what it once was. As a matter of fact, I believe the USDA office in China is expecting contraction in soybean imports in China during the new crop marketing year. So we've got this need for more domestic demand, and that's exactly what we'd like to see. Is this going to be for real or not? I don't know. The market's optimistic about it, and the market will tell you what's going on. The soybean oil market has rallied sharply this week. The rally really started on Friday, continued into yesterday, and even overnight. And this is on the heels of this biofuel coalition headline, and that helped to rally soybeans yesterday. This May soybean contract peaked just below that early March high, which was 1036.5. That's your big line in the sand that I'd like to see this thing close above today in order for it to look a little bit better from a technical standpoint. I threw in some extra numbers into this chart this morning. So this is U.S. soybean crush and exports, and you can see the trend here. The yellow bars is crush, the green bars are exports. Crush is increasing and increasing rapidly. And in its ag outlook forum in February, USDA told us that we would again crush a record amount of soybeans during the 25-26 marketing year, and that exports would again kind of be muted relative to what they had been from, say, like 2016 through 2020 or so. So I don't know. We hope that some of this policy or proposed policy becomes reality, because I think that unless you have like a crop failure out of Brazil, the export piece is going to continue to suffer. And as of right now, we're still depending on exports for 40+% of our demand for soybeans grown in the United States. So we need and we would like a more reliable domestic demand base, certainly.
President Trump's reciprocal tariffs take effect today. Trump will announce the specific tariffs on all U.S. trading partners today at 3 p.m. Central Time. The White House has yet to provide details about the size and scope of the tariffs. Trump's recently proposed 25% tariff on automobile imports will begin tomorrow. White House Press Secretary Caroline Leavitt stated that while Trump is open to negotiations, his main focus is on correcting past trade injustices. According to the American Farm Bureau Federation, farmers are expected to be the hardest hit by the trade war, as Mexico, Canada, and China were the top buyers of U.S. agricultural products in 2024. The group estimates that retaliatory tariffs could target nearly $27 billion worth of U.S. ag goods.
Of course, farmers are going to be the hardest hit because we don't produce anything in this country anymore aside from corn, soybeans, wheat, and beef and pork and things along those lines. So we don't have a whole lot else to export. We're a service economy, largely speaking. In any case, the countries that are involved have been kind of quiet. China actually made some sort of last-ditch effort last night, talking about how U.S. farmers and tech companies are beneficiaries of the U.S.-China economic ties. Mexico's been very quiet. Canada has been quietish. They've talked a little bit, but I think there's just a lot of uncertainty here. And that's why you look around the markets this morning, grains are off. You look at the stock market. I think that's also some Liberation Day jitters. So there's some concern and uncertainty here. And I think, I mean, I don't know, but I think you'll see some headlines today that could be market moving headlines, good or bad?
The radar is active over the central U.S. Corn Belt this morning. Early morning rains fell across much of Iowa and northern Illinois. The radar was also active across portions of southern Minnesota, Illinois, Wisconsin, Indiana, and Ohio. Separate systems work through North Dakota and South Dakota. Large rainfall totals are slated to begin accumulating in the south central Corn Belt today and into the early part of next week. This morning's GFS run suggests that portions of southern Illinois, western Kentucky, western Tennessee, northern Arkansas, and southeast Missouri will see up to 10 to 16 inches of rain in total over the next 5 days.
I keep looking at this GFS model, and it changes several times per day, and I keep thinking, oh, it's going to change and it's going to lighten up on the amounts, and it has not. Still talking 16 inches of rain for a part of that pocket of southern Illinois, and then your call it southeast Missouri, West Tennessee, West Kentucky, those sort of places. The Euro is maybe a little bit easier than the GFS with the totals, but this is a lot of rain that we're talking. I think this is part of the reason you saw strength in the grain markets yesterday. You will absolutely see flooding. You'll absolutely see planting delays in these areas. And yesterday, April 1st, was the first planting date for corn in a lot of these areas that are circled here on my screen. You could have problems with the winter wheat crop. You've got SRW wheat in those areas that could be negatively impacted by flooding. I think that maybe that's part of the reason wheat rallied yesterday. So overall, this is seen as being a friendly factor with regard to the grain markets, I believe.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about yesterday's premium video?
We did 43 minutes uncut with Pete Meyer yesterday. We took mailbag questions from our premium subscribers regarding the acreage and stocks report, and they were fantastic. There was some like market type stuff in there too. People wanted to know, Pete, one of the questions was, Pete, if there's a crop scare this summer, how high is D corn going to go? And Pete and I had drastically different opinions on that, just so you know. But in any case, Pete's fantastic. He is like a total no BS, like shoot it straight, tell you exactly what he thinks type guy, which is what we like on this show and in our premium content. So if you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody will try to sell you anything else. We send out 2 emails per day. Standard Grain Morning Update goes out every business day at 5 a.m. Central Time. It includes all of our headlines, charts, graphics, 6 most recent videos. All of my cash grain marketing recommendations are included. Our 10 a.m. email blast includes that day's premium video. You can jump on the text message list if you want. You don't have to give us your cell number. We're not going to do anything with it other than send you text messages. But give that deal a shot this morning, guys.
U.S. farmer sentiment declined last month amid increasing policy uncertainty. Purdue University CME Group Ag Economy Barometer Index decreased to 140 in March, a 12-point decline from February. The decline was driven by falling crop prices since mid-February and concerns over agricultural trade and farm policy. The survey also revealed that farmers' expectations for U.S. exports over the next 5 years hit a record low, with nearly 30% of respondents anticipating a decline. Additionally, 43% of farmers identified trade policy as the most significant factor affecting their farms. Nearly 2/3 of respondents believe a second round of MFP payments are likely or very likely to help offset lower prices caused by a trade war.
Okay, so I'm done paying attention to the actual sentiment number because it doesn't make any damn sense to me, as we've discussed in the past. I will run through some of these other charts that you just discussed, Mackenzie. Over the next 5 years, do you think agricultural exports are more likely to increase, decrease, or remain about the same? And it's kind of split here. 33% think will increase, 30% think will decrease. If the trade war leads to lower ag prices, how likely do you think MFP is? Basically, you've got 52% plus 13. I'm not good at math. 65% think that it's likely or very likely that we'll see MFP. And I think following that story that we did yesterday, that number's probably higher now. MFP is coming, guys. I think if I had to bet, I'd say, yeah, you're going to see another version of it. Maybe it's not called MFP, but unless you see a drastic change in soybean prices over the course of, call it, the next 10 months, it's probably coming. Which of the following policies or programs will be most important to your farm in the next 5 years? Trade policy, said 45%, which in this current environment, how could you say otherwise?
The forecast for Brazil's soybean and corn crops has been cut. According to consulting group StoneX, this season's soybean crop is estimated at 167.4 million metric tons, down marginally from the previous estimate of 168.3. The reduction was attributed to poor weather conditions in the Brazilian state of Rio Grande do Sul. Brazil's first and second corn crops were also revised lower. The first corn crop is estimated at 25.9 million metric tons, down from 26.5, and the second corn crop is projected at 101.6 million metric tons, down from 102.1.
To some extent, the soybean crop in Brazil is old news. It's being harvested. We kind of know what it is. It's a 170, maybe it's a 168. I don't know. It depends on who you ask. The second corn crop is what is of interest right now. And as it stands this morning, there just is not a weather issue. According to our friends at Crop Profit, Brazilian second corn country will see 107% of its normal rainfall over the next 14 days, which is just normal to slightly above normal. And I was interested. I asked the guys at Crop Profit, I said, are these numbers like that 107? Is that seasonal? And it is seasonal. So it's 107% normal rainfall for this time of year is what this is. So no problem right now with the second corn crop in Brazil. Brazil corn supplies, however, are very, very tight. They don't really have anything available for export right now. They will when this second crop is harvested, assuming that there's not some sort of big disaster. What did cattle do yesterday?
Cattle futures had a big day. Live cattle were $132 to $260 higher. Feeders saw gains ranging from $182 all the way up to $317. Choice box beef saw a big jump yesterday, rising $696 to $342.22, and select was up $206 at $322.07.
So no Liberation Day jitters in cattle yet?
Not yet. We'll just have to wait and see what happens, though.
And the cash market is still just straight fire to the moon?
Yep, heading for the moon.
All right. Outside markets this morning. Again, I think the stock market's a little jittery because of these tariffs. The Dow's down 200. The S&P's down 32. Bonds are flat. U.S. dollar's about flat. Crude oil is down 29 cents in the June WTI at 70.44 last trade. Have a great day, guys. Happy Liberation Day. We'll talk to you on Thursday.